By 2030, we project that autonomous mobility will generate $8.10 trillion in global income. In the US, Tesla is anticipated to take the lead, but China is advancing rapidly in this regard. Since they won't allow Tesla to rule there, it's conceivable that another business will overtake Tesla in China. But the benefit of autonomous mobility will be far higher in the US, where transportation expenses are much higher than in China. The demand for an autonomous solution has grown, particularly in light of the sharp increases in the cost of services such as Uber. This is a global tendency, not exclusive to St. Petersburg. Many of the critics have experience in the auto industry and question Tesla's ability to build a sufficient number of vehicles to support the high valuations being discussed. These analysts are specialists in internal combustion engines, but they lack knowledge of autonomy, software, hardware, or electric vehicles. Because they are unfamiliar with technologies like software, artificial intelligence, or battery technology, they have missed the point. Products that resemble cars are frequently given straight to the auto analysts for analysis, even though someone in the tech field who is aware that this is a tech company should be the one doing the analysis. This results in an internal organizational wrestling match. A persistent concern that both investors and devotees are wondering about as Cathie Wood makes waves with her 2024 projections is this the end for Tesla? We'll examine the successes and setbacks, highs and lows, that have shaped Tesla's trajectory as we dissect Cathie Wood's Tesla 2024 projections. Every move in this gripping tale, from calculated changes in their product selection to the competitive environment of the worldwide EV market, matters. So buckle up and get ready to travel through the disruptive and innovative corridors of the modern world. In this video, we'll analyze the most recent findings, look at Tesla's future, and reveal what's coming up. Greetings from Tesla Stock News. Press the like and subscribe buttons, and let's begin. Experts are scratching their heads, wondering if this industrial giant can really increase output to fulfill the astronomically high projections of $8.10 trillion in income by 2030. This occurs at a moment when, due to a number of causes, Tesla's shares have dropped by more than 30% since the start of the year. With an eye on the future of transportation, the discussion moves away from drones, robots, and even trucks and toward driverless taxi platforms. By 2030, it's predicted that the world would bring in an astounding $8 to $10 trillion, with the US expected to grab a sizable portion of this sum because its transportation expenses are higher than those of countries like China. Nevertheless, Tesla is unlikely to have an easy time holding onto its lead given the intense rivalry and China's quick advancements in this field. The growing need for autonomous solutions is demonstrated by the rising costs of services like as Uber. The idea of driverless automobiles offers a more effective business plan and might greatly reduce parking problems. Imagine a day in the future when there is a significant shift in the ratio of cars to parking spaces, releasing enormous real estate value. The leader of Tesla, Elon Musk, has also come under scrutiny, particularly because of his use of Twitter. Because Twitter is AI-driven, it's possible that it will teach him AI lessons that he can apply to the car industry, and vice versa. There is much conjecture as to how this would impact Tesla. Many believe that Musk's refocused attention will spur additional breakthroughs in the company's path, especially as it advances toward more effective, AI-driven production techniques. Tesla's next front in the war is the Cybertruck, which is approaching. Views on how successful it will be range greatly, from pessimistic estimates to sales projections never seen before. Whatever the result, it's obvious that Tesla is still making waves in the tech and mobility space, igniting conversations and raising expectations. In a recent article, Sam Corris, director of research for autonomous technology and robotics, highlighted the distinctive qualities and advantage of the Cybertruck. Elon Musk's invention, which prioritizes power, range, and cost-effectiveness, is poised to revolutionize the market. Let's dissect it now. Analysts are perplexed as to what classification the Cybertruck belongs in. Is it a pickup truck or a smaller SUV? The problem is that, like the Model S and Model 3 before it, the Cybertruck might carve out a distinct market for itself. Its cutting-edge features and design have the potential to upend customer expectations. Think about this. Although the Ford F-150 Lightning recently saw a price increase, we predict the Cybertruck will be priced lower while still providing competitive performance. Let's go on to valuation now. Granted that Tesla's market capitalization may appear astounding, the possibilities are virtually endless when considering the potential of autonomous technology. The effect of autonomous mobility on margins, which have the potential to rise much above traditional auto sales, is frequently ignored by analysts. Regarding autonomy, some have expressed skepticism. Yet, with the advancements in AI recently, things appear more promising than before. If autonomous travel becomes a reality, Tesla might be the first company to reach a $5 trillion market cap. Just think about it. The stock is currently trading between $180 and $200. But when autonomous transportation is included in 2027, the basic scenario is predicted to soar to a stunning $2,000. That translates to a possible growth rate over the following 7 years of between 40% and 60%. Time is of the essence, so get your small Cybertruck model now to up your collection game. Let's now examine how we got at this prediction. It all comes down to comprehending those S-curves, or the adoption and innovation trends. Forecasts from 2015 indicated that there would be 250,000 electric vehicles by 2022. After all this time, we're looking at an astounding 7.7 million. Quite the jump, huh? Indeed, these are exciting times. Of course, Cathie Wood still has Tesla as her trading ace, but as an investor, should you follow suit? It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is the one-stop shop for Tesla bulls and investors who have an eye for the next big thing in the stock market. It provides the most recent information on Elon Musk, inventions, and Tesla's stock price targets. One of the greatest places to find Tesla news online is Seeking Alpha. Get to the truth without listening to the mainstream media's anti-Tesla rhetoric. To take advantage of a special discount, click the link in the description. Let's now discuss expertise. While conventional car analysts may doubt Tesla's capacity to meet demand, they are omitting an important detail. This is about software, hardware, and autonomous technologies, not just about cars. Tesla excels in that area, leaving the doubters perplexed. Still, there's a sense of shift on Wall Street. The topic of discourse is changing. It's important to accept Tesla as a tech giant rather than focus solely on cars these days. Change, though, may still be a while off. Even if they covered Ford, auto analysts are now concentrating on the massive player in electric vehicles as its shares have sharply declined, falling more than 30% since the year started. What therefore is causing this declining trend? The decline has been fueled by analyst downgrades, which have included a recent negative rating from Wells Fargo and rumors of a possible downturn in the market for electric vehicles. But let's explore further. The CEO of Gerber Kawasaki Wealth and Investment Management, Ross Gerber, offers his thoughts on Tesla's decline. Regarding Tesla, Elon Musk's engagement with Twitter wasn't really part of the original narrative that most investors bought into. We all thought for a while that it wouldn't have an impact on Tesla's demand for its goods, but it has as of late. The company's profits have been negatively impacted by discounts and other actions that negatively impact margins and returns due to the evident decline in demand for Tesla products. You have the conundrum of not knowing where to draw the line when the company's CEO walks out every day and undermines demand while they do nothing to generate it. Actually, each and every day. It was Donald Trump yesterday. It's something different now. Is it just a market correction, or are there more serious issues at play here? Sadly, Ross clarified, it's a little bit of both. Many investors accepted Tesla's narrative without taking Elon Musk's outbursts on Twitter into account. Due to the impact of his activities on demand, the corporation was forced to use discounts and other strategies that negatively impacted margins and earnings. It's true that valuing a Tesla is not simple. Once heralded as an automobile manufacturer, it is today viewed as a tech titan. But how can we fairly value Tesla now that EV valuations are declining? In all of the upheaval, Tesla is still a tech titan. The corporation keeps pushing the envelope of innovation in everything from battery technology to manufacturing efficiency, which is clouding the stock. This careful balancing act between market mood and technological advancements is reflected in the stock performance of the corporation. Though Tesla's